NEP
उस पे क्या impact पड़ेगा? हुआ? 5.5 वाला तेरा वो आ गया? कर लो ये।
हाँ खुला है, कोई आया नहीं है।
Zoom call पे इन लोग को ऐड करके होस्ट बनाओ।
कोई आया नहीं है।
इन लोग को ऐड करके होस्ट बनाओ।
लेकिन यू हैव अ एकदम स्टेबल इंटरनेट कनेक्शन इंश्योर। ठीक है तो फिर लीव इट उधर बाजू में, डोंट लेट इट गो कहीं पे। क्या इस पे तो अभी तो आ रहा है फिलहाल। मैं ये नया लिंक डाल रहा हूँ, ये डिलीट कर रहा हूँ। मैं जूम का भी भेज दे रहा हूँ लिंक। यार एक ही पे कर सकते हैं। हाँ वो कर रहा था। ओह मेरा म्यूट पे
Good evening, sir. Sir, am I audible? Samarth, am I audible? Yes, sir. Sir, am I audible?
Yeah, now you are audible.
Yes, sir. Okay.
So, could you get anyone else?
Sir, we are actually streaming it live. Sir, am I audible?
Now you are in between. It went off.
Yes,
Director is there. Will join.
No, sir.
And Shrikant.
So Shrikant Shastri, sir, will be coming.
Oh, great, great, great.
I don't understand. I am getting an echo over here.
Can I talk?
Yes, sir. So now, am I audible to you?
Yeah, you are audible. But is there a problem at my end?
No, sir. You're clear.
Okay.
So for now, Director ma'am hasn't replied, but Shrikant Shastri sir is coming and Shubhranshu sir is also coming. So you three would be speaking to launch the event.
Yeah. So okay. Yeah. So I will talk about you and your ECell.
It's up to you, sir. You can
ECV.
talk about CEI as well. So you can broadly talk about the entrepreneurial nurturing that is happening at IIM Calcutta right now, and then if you can spare a couple of words, it is fine.
No, I will be, after that I will be watching.
Yes, sir. So we are streaming it online. We are live streaming it on YouTube. So most of the participants would be watching it through YouTube.
From 6 p.m., is it?
Yes, sir. So right from 5:30. So all the participants would be watching the whole event through
Okay.
YouTube, not this. So we are not taking any participants here. So
Oh,
everything.
okay. So we should also do this for our.
Yes, sir.
Uh,
For our webinar series. Yes,
yeah,
definitely.
yeah,
To
yeah.
avoid any disturbance. And
Correct.
for now, there are around 570 participants watching it.
Wow.
Yes, sir.
So how do I go there to click on this live on YouTube?
Live on YouTube, I think
View
yes.
stream. Yes, I got it. View
So,
stream on. Okay.
do we see? It is live on YouTube. Okay.
Yeah, I can see you there.
Okay, where is the live on YouTube? Okay. So, sir, is my voice bleak or can you hear it clearly?
I'm able to hear clearly.
Okay, sure, sir. Shrikant Shastri sir has started to come. He's in.
Hey Nikhil, how are you?
I'm great, sir. Good evening.
Good
Thank
evening.
you.
Hi Balram. You're looking different,
sir.
Nikhil. All hair brushed and so on and so forth.
Hello, sir.
Hi Balram.
How are you?
It's not so cold in Calcutta for you to wear a sweater.
For me,
I'm in Joka, not in Calcutta. So we like to joke that we are 2 degrees lower than Calcutta.
Correct.
But I noticed that as you age, your tolerance to cold is also reducing.
Reduces. You should not be saying that. People like us should be saying that. You're a lot younger.
Yeah.
so thank you for coming on such a short notice. We didn't
No,
expect
no.
that you revert back.
Fortunately, my previous meeting was finishing at 5:30, so I just told them I'll leave at 5:25. So I normally try and finish by 6:30, but today, fortunately, my last meeting was finishing at 5:30, so it worked out well.
Okay, that's fortunate for us. Yeah.
So you got a good panel of speakers, etc. Very well done, Nikhil.
Thank you, sir. So around 45 people have been working for the past 2 months.
I
to
can
come
imagine.
in such a big panel.
This would have required a lot of work, actually.
Yes, sir.
Normally, this event is held on ground, on campus?
Generally. So
Generally.
until last time, it was offline.
Okay.
But online has opened up a lot more avenues for us,
Okay.
particularly this year. So to update, hello Shubhranshu sir, good evening.
Good evening, Nikhil.
Hi, Shubhranshu.
Hi, Shubhranshu.
Shubhranshu will complain that I don't give IMC IP time, I'm giving ECell time. You're on mute.
Yeah, that too in a very short notice. Nikhil told me that I don't know. But Srikanth sir will tell me. I have not given enough notice.
So sir, just to update the three of you, the event is streaming live on YouTube. So the participants will not be here. All the participants would be watching this session live on YouTube.
Okay.
So only the hosts and the guests of honor will be in the Zoom link.
Okay.
Yes, sir. So whenever you're ready, we can launch the event.
So what is the sequence, agenda? What is the plan for the next 20-30 minutes?
Yes, for the next 20 minutes, first Srikanth Shastri sir will be giving a 5-minute speech on the pointers that I have given him.
Okay.
Then we'll go Balram sir. He will speak about the entrepreneurial ecosystem and a few words about ECell. And then we'll go Shubhranshu sir.
Okay.
Will represent the CA. Okay, sir.
Okay.
Okay. So shall we start?
Yeah. You'll make some initial comments, I'm assuming, right?
Yes, sir. I'll introduce the first
yeah.
and then.
Okay.
I'll just cue the backend team. Just a minute. Very good evening, everyone. My name is Nikhil Chaitanya, and I'm the president of Entrepreneurship Cell IIM Calcutta. Welcome to the inaugural ceremony of Genesis, the flagship e-summit of IIM Calcutta. The theme for this year is Imagining a New Tomorrow. We have seen a tremendous participation across various parts of the country, thanks to the online transition of the fest. Transition to online medium has given us a unique opportunity to invite eminent speakers across industry domains. With that, let me welcome Mr. Srikanth Shastri, Chairman of IIM Calcutta Innovation Park and Chairman of I3G Advisory Network and a serial entrepreneur, to speak a few words on the entrepreneurial ecosystem at IIM Calcutta.
Thank you, Nikhil. It's a pleasure and honor to be here at the inaugural event of Genesis. By the way, I love your tagline, Imagining a New Tomorrow, because tomorrow in a post-COVID world has a whole new meaning for entrepreneurs. And my single biggest takeaway from 2020, and therefore the single biggest message to all the participants, is be more bold, because many of the traditional boundaries that hold back entrepreneurs, they've simply vanished during COVID. 3 examples. You can today go and access global mentors. You could be in Calcutta, Bangalore, Bombay, anywhere. You can access mentors in Silicon Valley, Europe, Australia, anywhere. Investors are writing checks without meeting you face to face. So that boundary is also vanished. And you can sell to customers anywhere in the world. Customers no longer expect you to invest in a sales force which can travel to US, Europe to sell your product. You can sell remotely. So with all those boundaries gone, if you choose to be an entrepreneur, you can be really bold now. And this is particularly true for some of the sunrise sectors like health tech, ed tech, clean tech, but it's generally true. So I would urge everyone, please dare to dream bigger, bolder, better. I was personally lucky when I'm in my late 50s to be involved in such ventures even at this age during COVID. And one of them was a wonderful venture where I helped a team of young engineers build an ICU ventilator in 90 days. The normal timeline is 18 months. 18 months crunched to 90 days. Can you imagine how many boundaries have got demolished? And ventilators is one example. India's meteoric growth in PPE, personal protection equipment, is well known. From zero, India has become among the top 2 manufacturers in the world in a span of 6 months. Now that's Atmanirbhar Bharat happening. So by dreaming big, by dreaming bold, and imagining a new tomorrow, I think Atmanirbhar Bharat can be a reality. So I want to end by thanking Nikhil, you and the ECell team, and complimenting all of you, not only for the great event that you're putting together. I've had the privilege of interacting with all of you closely as chairman of the IIM Calcutta Innovation Park. And I want to compliment you and thank you for several things. One is for hosting this fantastic event. Second is for the way you stepped forward to collaborate so closely with IIM Calcutta Innovation Park and CEI that Professor Balram heads in 2020 to 2021 to create a unique triad of 3 powerful forces that can create magic. And we have 2 live examples in front of us. Together, you have created with Shubhranshu and Balram the post-COVID venture enterprise experience program, the 6-month task force where students, faculty, alum, mentors all come together to create 5 great startups. And then your pitchers program, where your students are helping IMC IP startups create a strong pitch deck. So thank you for all this, and thank you for inviting me for as being part of the inaugural function of the event. You truly made me feel proud as an IMC alum and chairman of IMC IP. So I wish all of you great luck and outstanding 4 days as part of Genesis. Thank you once again.
Thanks a lot, sir. Thanks a lot for such kind words. It means a lot to all of us. Now, let me invite Mr. Balram Avitathur, Chairman at Center for Entrepreneurship and Innovation, IIM Calcutta, and Professor at IIM Calcutta, to share a couple of words with us.
Yeah, good evening. Thank you, Nikhil. Good evening, Shrikant, Shubhranshu, Nikhil, all the participants, and the other volunteers of the event. I'm very happy to be part of this inauguration ceremony. And what I would like to say is that though I have spent close to 22 years now at IIM Calcutta, it took me so long to realize what great contribution IIM Calcutta alum have done in the space of entrepreneurship. We have one success story sitting right with us, Mr. Shastri. But if I have one regret, it is in realizing so late. I knew a few names, but I never knew that IIM Calcutta and on the entrepreneurship space were so what do you call, heavily occupied by alum from this institute. And so there is something which I think is a magic of this place. I don't know what exactly has been going on. I don't think I would take the credit for all those entrepreneurships. I mean, the great activities which have been going in the entrepreneurship space. So we have only been giving whatever we know. But in the process, I have also discovered a few other things like the ECell. Of course, I have been aware of the IMC IP and many of the great things which have been happening there. But the ECell is also something which has been of a late discovery for me. And they have Nikhil and his bunch of volunteers in this cell have been so great in terms of enabling some of the activities which the CEI itself has planned, the Center for Entrepreneurship and Innovation has planned. So I would think that while we started with very modest ambitions, I also discovered that when everyone sits together, the IMC IP, the CEI, and the ECell, there is plenty that we can do. And I have this aim and objective that whatever the alum of IIM Calcutta have achieved, that should get far more publicity than what it currently has received, at least from the IIM Calcutta side. I hope we would be successful in that objective. And the other thing I would like to mention is, in the process of all these aspects that I have discovered in the last 1 or 2 years, I also understand that this is where the future lies for all the people who are like finishing their MBA or in their 20s or in general in their 20s or 30s. Uh, I belong to a generation where we thought that what is important is to work for some established big name place. I'm very happy to get corrected on that impression that that is probably not the right thing to do. That there are so many other things that you can discover by getting on a journey of your own. And as Mr. Shastri has mentioned, a little bit of risk taking is always great. I would wish all the best for this event. Very impressed to see the speaker list. So all the best and have great 2 or 3 days time. Bye. Thanks.
Thanks a lot, sir. Thanks a lot. That was quite a good amount of motivation. Thank you for your gracious speech, sir. Now let me welcome Mr. Shubhranshu Sanyal, the CEO of IIM Calcutta Innovation Park and an IIM Calcutta alumnus himself, to share a couple of words about the entrepreneurial significance at IIMC. Over to you, sir.
Yeah, thanks, Nick. Good evening, everybody. So after Srikanth and Professor Balram, Srikanth has mentioned very important points about how the ECell has come up and utilize this opportunity, collaborate with IMCIP staffs, and Professor Balram also spoke about the entrepreneur, the strength of IIM Calcutta in terms of entrepreneurship. So I'll just add on to that. So as IIM Calcutta Innovation Park, I've been associated with the ECell events for the last 6 years. And this year, at the beginning, when we were planning our events and programs, we were not sure that what to plan, because there was so much uncertainty how much we'll be able to execute. Generally, this Genesis program, it happens in a big way in the campus, where we have more than 500, 600 students coming and attending the summit. We have speakers coming, from various parts of India, speakers being entrepreneurs, investors. We have a very strong pitching competition, hardly fought. And so we said that this year things are not going to happen. So maybe we postpone it for the next year. But then, after a while, we figured out that maybe this is an opportunity to have world-class leaders, coming and talking to us during this Genesis event, which has never happened earlier because of the physical travel and all those related challenges. And then, as Srikanth was saying, there is no wall, there is no barrier. And I'm so happy to see that the ECell team, led by Nikhil and his, and the other students, they have really created a fantastic event schedule where, in fact, generally, I don't attend all the sections, but this time it's so interesting that I have blocked my calendar to attend several sessions myself, learn. So it's so exciting. So just a few words on the activities that we do with the entrepreneurship cell. So the IIM Calcutta Innovation Park is like a bridge between, one side we have the academic body where we have faculty, researchers and all. The other side, we have the students. And on the third side, we have the other stakeholders, external stakeholders like government, corporate and all. So IMCIP is like a bridge which connects all these dots. So this year, what the interesting thing is that we have seen, again, maybe because of the pandemic, the students didn't have a lot of physical activities. Maybe because of that, they thought of, okay, let's take this opportunity to focus on entrepreneurship and help entrepreneurs. And we have kicked off so many initiatives with the students this time. And one specific theme that we are very keen to promote, which we learned from the pandemic, is the power of collaboration. How the startup suffered during the pandemic because of loss of business, the supply side was not working, the customers, they couldn't reach the customers. So then we figured out that the power of collaboration actually can help them. No knowledge, no gyan. One startup can help each other, the other startup. So this power of collaboration, we thought that now, after we figured out that yes, it is really working for us, we thought that let us extend this power of collaboration where students are also involved in this ecosystem. So that has started working, and inspired by this, even in our board meetings and all, we are discussing to whatever initiatives we have kicked off to make it bigger, better. The second one, from a IIM CIP mission, we think Atmanirbhar Bharat is really the need of the hour, because we work very closely with the grassroots level entrepreneurs. You know that we are knowledge partner to 5 states. So our people go district level. So we are observing the challenges these small entrepreneurs are facing. So we would like to focus on promoting innovation that helps creation of livelihood in this, this is the need of the hour, that solve some of the challenges through innovation. So this is focus area for IMCIP in the next couple of years, and we think will contribute towards effectively and actively towards, I would say, rebuilding the economy which has suffered badly due to this pandemic. And my appeal to all of you, all the participants, all the entrepreneurs, aspiring entrepreneurs here today is we are there for you. If you have the same kind of vision, we will be there to help you. Our alumni, faculty, students, everybody is there to support you. Thank you very much. Wish the ECell a great success. So that's it. Thank you.
Thanks a lot, sir. Thanks a lot to the 3 of you for giving such a heartwarming welcome to the audiences of Genesis. Thank you. Thank you for coming up, showing up at such a short notice. This means a lot to all of us. The whole ECell team got boosted up for this. Thank you for that. And with that, without any wait, let's formally launch one of the most exciting fests of the year, organized by Entrepreneurship Cell IIM Calcutta in association with CEI and IMCIP. Genesis stands open. Thank you, sir.
Congratulations.
Sir.
Congratulations.
So with this, the sessions will start from 6 o'clock, sir.
Okay.
So the first session is with Raghav Bahl, sir. So
Thank you. All the best.
yes,
Thank you,
Bye.
Nikhil.
thanks
Bye.
a lot, sir.
you.
Thanks a lot for
Bye,
coming.
best.
Bye,
Bye.
Professor Balram.
Bye.
Yes.
Bye.
Bye, sir.
We can leave now.
Yes, sir.
Yeah, hello guys. I was just calling in to see whether we are all connected fine.
Yes, sir. Yes, sir. Good evening, sir.
Good evening. So we seem to be working fine. So you want me to log out and log in at 6 or? just stay on the line, or what do you want?
No, sir, you
Can't hear you. Sorry.
stay online. We'll be starting in about 3 to 4 minutes.
Okay, so I'm staying
Then-
online then. All right. I'm
Now-
muting myself until you guys are ready to start.
Yes, sir. Sure, sure. Thank you, sir. Sir, we are starting. Sir, hello. I'm on.
Yes.
Okay, sir. All right.
Good evening, sir. It's so pleasure to meet you.
Likewise, it's an absolute pleasure. Thank you for asking me.
Okay. So let's start. So, good evening, everyone. We are here for the first session of Genesis, which is the annual e-summit of IIM Calcutta. Since we are moving towards a new normal and new beginnings, the theme of this year's summit is imagining a new tomorrow in the medium, which is quite the norm now, that is online. In the past, Genesis has seen participation from more than 13,000 students, 1,000 plus startups, as well as 200 plus industry experts. So, as we can see, like the enthusiasm for doing something new is not dependent on the environment. We are witnessing an amazing amount of participation this year too, even though we are online. With this, let's start our journey, our 4-day journey of learning, competitions, and fun. So today we have with us Raghav Bahl, sir, who is a serial entrepreneur and investor with several successful exits to his credit. Besides founding and scaling Network 18, India's leading media group, Raghav sir has also seeded moneycontrol.com, bookmyshow.com, firstpost.com, yatra.com, among others. He started making television news capsules while reading while studying economics at St. Stephen's. After an MBA at FMS Delhi, Raghav's career followed an obvious trajectory, beginning as a management consultant at AF Ferguson, followed by a stint at Amex. But news was a natural home for him, and he quit the cozy comforts of international banking and went on to set up Network 18, among India's top media houses. He has also managed long and successful partnerships with some of the world's leading media brands: CNBC, Viacom, BBC, Star TV, A&E, Time Warner, Forbes. As the audience is increasingly shifting out of television and into digital media, he is now focused on scaling a cutting-edge digital media business, straddling content and tech distribution. So today's session would be along the lines of the challenges that media startups face. This is quite important as democracy's fourth pillar is media. This importance itself creates parameters around which media startups have to work. Whether it be ethical, logistics, or competition, there are lessons everywhere in this domain. So today, Raghav sir will share with us his experience and how he reached to his pinnacle in the industry where he is today. So Raghav sir, the floor is yours.
Thank you. Thank you very much. It's always a pleasure to speak with particularly business students, because many of you will go on to become entrepreneurs. Many of you will go on to become business leaders. And the challenges that you will face are, I can almost sort of foresee, because in any entrepreneur or business leader's journey, these are challenges that all of us encounter, and you guys will do the same. So it's always such a pleasure to speak with, particularly with budding entrepreneurs and business leaders. Today, I thought for about 30 to 35 minutes, I will talk about my own entrepreneurial journey. I'm a first-generation entrepreneur. I wasn't born into an industrial family or a business family. So first-generation entrepreneurs actually go through a fairly typical curve. So I'll share those insights, learnings with you. And then after that, we could have a conversation after about 30, 35 minutes of talking. So, one of the questions that I'm often asked now, after about three and a half decades of that journey, is, did you always want to be an entrepreneur? And the answer that I have always given to that is, I don't think in life any one of us has a very firm idea of what we will end up becoming. Life, by its very definition, is a constellation, is a coalition of circumstance, of luck, of opportunity, of seizing some options that suddenly present themselves to you. So it's very difficult to say that one was born with an ambition to be X, Y, Z. One becomes that X, Y, Z because of two or three things. Because of the fact that you have a foundational need to do something. Some of us have the need to work in a large organization. Some of us have the need for independence. Some of us have the need for creating wealth. So those are foundational ambitions that all of us have as human beings. And then comes a coalition of circumstances, which then forces it, which sort of aligns ambition, and we find our own path. So my journey, when I was in school and college, I came from a very regular middle-class Indian family. My father was in the IAS, an IAS in the 60s and 70s was most of these guys were on this quest for nation building and were idealistic people. And therefore, lifestyles were fairly ordinary and modest. However, having said that, while materially they were ordinary and modest, in terms of opportunity, they opened a lot of doors. I have no qualms in admitting that. You had the best of education, you went to the best of schools, you then went to the best of colleges, because of the kind of doors that your families position in the social hierarchy would open for you. So I had the same privileges, very modest, very material upbringing, in material terms, very modest upbringing, but extremely, a large amount of access to all the good education and opportunities that life would afford. I went to St. Xavier's School in Delhi. Then I went to St. Stephen's College in Delhi, and then I did my MBA from Faculty of Management Studies. And I, like any other, good middle class Indian boy, whose parents are very happy that he or she, should be in a good, secure job. I also joined my first job in the corporate sector, that was A.F. Ferguson and Company, then a very, very well-known management consultancy. I'm talking about 1985, so a long time back. I stayed there for 2 years, and then I said I wanted to get a look at how large corporations work. So I joined American Express Bank in the travel side, and I spent a few months there, not too many. But I got to see the inside working of a large American corporation, how streamlined and how efficient and how everything is so templated and everything is manualized, and everything is very efficient and very stringent almost. So I saw that. But, all along this journey of working, I was always very actively doing television as a hobby, because you could only do it as a hobby in the 1980s, because unlike now, you guys won't even imagine that there was just one television channel in the country, not the 800, 900 TV channels that we see today. Just one television channel, state-owned, Doordarshan broadcaster. And whatever you did with it was on a casual sort of basis. You got something like 250 rupees for anchoring a show. So you could make a life out of it. But I would always do it as a hobby. So I was doing that, and I was doing my corporate sector job. And I always had that great desire to be independent, to create something of my own. You had that desire, but you never had the capital to do it. And you never had any opportunity to do it, because those were the days that Indian economy was dominated by large industrial conglomerates and families. And there was pretty much nothing called a first generation entrepreneur. Pretty much nothing, because, the ability to raise capital was not there. But, and this is where I say the coalition of fortuitous circumstances happens in life. In the early 90s, two things happened in India together. One was the advent of satellite television. Suddenly, when the war in Gulf happened, when Kuwait was invaded, CNN started broadcasting live images of that war using a very new technology at that point in time called satellite television. Now, suddenly, you were not confined to terrestrial broadcast transmitters, but suddenly you had a coverage from a satellite up in the sky, which would then beam the signals. And suddenly the tyranny of geographical boundaries was broken. Television was not confined to geographical boundaries anymore. Television became an international medium because of satellite imagery and satellite technology. So that happened in 1991, the Gulf War and the fact that satellite TV came to India. Coincidentally, around the same time, the Indian economy began liberalizing. The whole economic crisis, I'm sure you guys have studied it, and how the economy was opened up, and industrial licensing was abolished, and foreign investment was welcomed. All of that happened in 1991, 92. Therefore, at that point in time, we all heard of a phrase which you guys possibly speak about 10 times in the day. But we heard about it for the first time in 91, 92. Something called venture capital. Something called, people would come in and they would value your intellectual capital. So if you had skills and you had knowledge, you had intellectual capital, they would come and value that intellectual capital, and then they were willing to give you regular capital, money, to back your dreams. So for me, this was a very clear confluence, a very fortuitous confluence of circumstances, because I was doing television as a hobby. I loved news. I was doing a lot of news on television, but as a not my main activity. now I Indian content will become so or a MBA, you understand the world. It's not in that sort of content company, and we got our first backer. I think our first backer was Morgan Stanley. So suddenly, as I said, you had this ability to monetize your intellectual capital. You were no longer a poor guy who had to survive on a salary. You suddenly were able to get capital. That's how my journey started. We said we will produce 2 programs because satellite TV, when it had just started in India in 91, 92, there was BBC World and then there was Star TV, Murdoch Star TV and BBC World. And both of them were just broadcasting international programs into India. But it was very clear to me, having lived in India all my life, it was very clear to me that in India, we would become, we would need our own content. We cannot, it was too large a country. It is a country with its own ethos of content, hundreds and dozens of years of content. We had a free press, we had a free media. So there's no way that satellite TV in India could grow without local content. So I said, this is a great opportunity. Satellite TV has just come in. I understand content. Let's get into content and we will get capital to scale up as well. So we created two. Pilot programs. One, a weekly business show, and one, a weekly English language entertainment feature show called the India Show. The business show was called India Business Report, and the English feature show, entertainment feature show, was called India Report. And we sent these 2 pilot tapes out. One went to the BBC World in London, the other went to Star TV in Hong Kong. We couriered the tapes and then we waited. As luck would have it, both the networks saw the pilot tapes. They were not thrown away into some dustbin. They saw the pilot tapes. They also realized that they were gaining rapid audiences in India because of satellite TV. They also realized that a local show would add to their engagement factor with local audiences. So both these shows were commissioned. And that's how my entrepreneurial journey started, with 2 tapes which went in 2 different directions and 2 courier packets, one London, one Hong Kong. Both were seen and both got commissioned. And then, since we had sort of what in the venture capital world is called proof of concept, since we had now given proof of concept, we had produced these shows and these shows had been commissioned. We started reaching out for capital. And as I said, our first investor was Morgan Stanley. And it was a great feeling, absolutely wonderful feeling that here we were, people who were, just young men and women who thought that, they had, they were pretty, they didn't have any exceptional thing about them. But here was someone coming in willing to give you money. And I think our first capital raise, if I remember right, was about 6 crore rupees, which is 6 crore rupees. And we ended up giving up, I think, 25% of the company. That's when I learned my first lesson, and that's of entrepreneurship. We think, as entrepreneurs, we think when we get our first equity infusion that, oh, wow, we've got free money. The sense is free money because equity comes without any strings attached, right? It's, you can write off all equity, fail, and there'll be no there'll be no legal obligations on you. So you think, wow, I've got this free money, but very, very of building a business. Because once you've given that equity away, please believe me, your life will never get it back. Because your own success becomes your own enemy. Because as you become successful, the equity value goes up exponentially. And if you then want to increase your stake in the company, your success makes it even more impossible for you to do that. So that was a lesson much later on in life that I realized that, you shouldn't give up equity so easily. You think it's free money, it's not. It's a very expensive way of funding any business. But be that as it may, it also opens up doors and opportunities for you. So we started, and in the first few years, we grew dramatically. When I say dramatically, we grew from a turnover of 1 crore rupees to a turnover of about 20 crore rupees, which is 20x. It's dramatic. The small numbers, but it's dramatic still over about 5-6 years. And lots of channels were coming up rapidly. ZTV, Sony, a channel called Home TV, which eventually folded up, but that was launched as well. So channels were getting launched. Content, everyone needed content. We were the whiz kids in town, producing for BBC World and producing for Star TV, and then we started producing for ZTV, and then we started producing for Sony. As I said, turnover went up from 1 crore to about 20 crores. And that's when I think I made my first big mistake as an entrepreneur. Remember, entrepreneurs will always make mistakes, because unless you make mistakes, you don't fail. Unless you don't fail, you don't quite learn valuable lessons. And in any case, the heart and the core of an entrepreneur is what? That he or she must take chances, must take risks, must try and create wealth. If you stumble and fall, you got to pick yourself up, and you got to go out and rectify your mistakes and rebuild. So that's when I made my first mistake. Business was growing so fast that we created a very big cost structure. What I did not realize at that point in time, it's a very simple lesson, but when you're on the go, when you're growing so fast, you forget simple lessons. That my revenue stream, the revenue stream was episodic, because the contracts that we were entering into for programs were limited period contracts, 13 weeks, 26 weeks, 1 season, 2 season kind of contracts. But on the other hand, we were so taken up with the rate of growth that we built a very heavy fixed cost structure to deliver on that growth. So we had lots of people on our rolls, writers, cameramen, editors, videotape editors, all of that. So we had a fixed cost structure and we had a variable revenue model. And that is a recipe for disaster. That's my first big failing and my first big lesson. Because what happens is that as a marketplace becomes more competitive, especially in contract work, not brand, you're not earning from your brand, you're earning from contracts. As the marketplace becomes very competitive in contract work, a lot of smaller entrepreneurs jump in, a lot of husband-wife combinations jumped in, a lot of mom and pop shops jumped in, people who would produce 1 show, 2 shows, 3, very good work. I'm not saying they didn't do good work, but they were small scale. And then, cameramen, husband-wife combination started producing shows, directors started producing shows, script writers started producing shows. So suddenly, the whole thing got atomized, and the contracts got farmed out to a lot of these people. So we had a situation where our variable revenue was coming down and our fixed costs were in place. So that's my first brush with, we had to dismantle the fixed cost structure. We had to lay off people. Laying off people is a very, very difficult job. It's often seen that the pain is borne by the person who's laid off, but I can assure you that the pain for the person who lays off is also extremely traumatic, because it's a very, very painful thing to tell someone that you're not required, your job's gone, and take some compensation and please go and find another job. People cry, people break down, people have family commitments, people are going through family tragedies, family difficulties. It's a very difficult exercise, but that was my first brush with it. And I learned a very valuable lesson, that for variable revenue businesses, please keep your costs variable. Do not make the mistake of setting up a fixed cost structure for a variable cost model. Now, on the entertainment business I'm talking about, but on the other hand, in the news business, the situation was exactly the opposite. We were producing a weekly program for BBC World, and it was becoming very clear to me that India would graduate very soon to the 24-hour news channel model, like CNN, like CNBC in America. And therefore, this weekly show is an anachronism. It cannot survive, because news thrives itself on infrastructure. You've got to have bureaus, you've got to have satellite links connecting those bureaus, you've got to be in studios You've got to have power backups, 24-hour transmission. It's a very, very fixed cost game. So completely different learning in the news part of our business, that you actually could not be in a variable cost model if you wanted to survive. Otherwise, you would die, because people will come in and set up infrastructure and take over your business. You needed to get into broadcast, and if you needed to get into broadcast, you then needed to be able to set up the infrastructure. So that's when I learned my second very big lesson as a first generation entrepreneur. The BBC was not interested in doing a 24-hour channel in India. They said, we are very happy with the weekly show that you are doing. Maybe we can add another weekly show, which they did, to the one that we were doing. But we don't want to get into India and become a 24-hour broadcaster. My position with them was that unless you become a 24-hour broadcaster in India, this weekly programming format would die. So after 7-8 years of producing India Business Report for BBC World through the 90s, from about 92 to 99, 98, 99, I had to take a very tough decision. And since I was also anchoring that show and editing that show had virtually become my identity. Globally, if I would go to business, since the show was broadcast globally on BBC World, I would have people who would watch it in London, New York, Germany, and in different time zones, and one would get recognized in business forums. But I had to take a call that if we wanted to grow and become a broadcaster, then I could not keep ourselves confined to the weekly show. So we had to break our relationship with BBC, because on the other hand, CNBC had approached us and said, we've seen the kind of work that you've done for BBC. We'd like to launch a 24-hour television channel, our American service, into India. We would then like to create an Indian band of programming about 2 hours. So we jumped at it. We said, we'll do it. Make a very, very, personally for me, a painful switch, because that show was my identity. The BBC show had become my identity. But I realized that if I continued with that, we would finish off. We needed to scale up in ambition. So I had to give up something that was my identity and start a new joint venture with CNBC. And there also we told them that, that is the second big lesson as an entrepreneur, that you can't become wedded to a personal need. You have to take a difficult call for organizational growth. And if that means giving up something that you love, because it is needed for the organization to grow, you have to be able to do it. You have to have that sort of strength inside you to say, I will shed this identity because the organization, if it has to grow, needs me to take on a different identity. So we did that. CNBC, when they told us 2 hours, we said, you're reading India wrong. India is not a 2-hour market. You will have to reinvent your American service. We don't believe in a 2-hour band we'll be able to make any impact. If you really want to make an impact, we have to go live with the stock markets. We have to start at 9 a.m. in the morning, go through live broadcast through the day. We said we'll call it Bazaar. We came up with that brand name. To this day on CNBC TV 18, it's a flagship program. So we said we'll do that. So CNBC told us, Raghav, we hear you. You probably are right. But we have a very different estimate of the Indian market. We believe it's a very tiny market. In fact, they used a number. They said, we believe the max revenue potential of this market is about $3 million. So if it's $3 million, then we don't feel the need. We don't feel the impetus or even the instinct to go and invest equity capital. It's too risky for us. It's too small. It's too risky. If you want to invest, please go ahead and do. We will give you a brand franchise agreement. And that's how we took a second leap of faith. I said, so on the entertainment side, we had to downscale the business. On the news side, we had to upscale the business. I said, we have to do it. So we took it on. We said, all right, you give us the brand, you give us the content franchise, we will make the investments. So we made all the investments in CNBC TV 18 as a 100% owner of the brand. And we took the franchise. And, in hindsight, I could turn around to the and say how much you misread the market. You felt it's a $3 million market. Well, CNBC TV 18's revenues today are, I believe, in the region of maybe about $30 million. So it's 10x. They misread the market by 10x. But be that as it may, in the late 90s, we took on that CNBC TV 18 franchise. We took on the challenge. We, of course, still hadn't figured out our funding, but I was confident that we may be able to raise it. And that's when, so lesson number one, variable cost. Lesson number two, if you have to even shed your identity and take a tough call, but do something for the growth of the organization, you must do that, even if it means taking a big risk. And lesson number three is you will get lucky sometime. Luck is a very important factor in life. And that's when we got lucky. So when we did the CNBC transaction in the late 90s, suddenly the market started booming. This was the big dot-com boom, 2000, if you recall. The markets were just going nuts all over the world. And for a very, very strange reason, media companies were being treated like technology companies. So, they used to say media TMT, technology, media, tech, were the telecom, media, tech were the three sort of sexy sectors. And so therefore we were there right in the middle of the sexy sector. Media, people were willing to bet on us. And we had a great international brand as a partner, CNBC, TV 18. So we said, well, let's be opportunistic. We've just got this joint venture. Let's encash it. Let's get the equity in. So we really have the capital to scale up. That was my lesson number 3. Be opportunistic. If you have the ability to raise equity at a very good premium, not sell cheap. If you have the opportunity to raise equity at a very good premium, then you must do that. So be opportunistic. We did, as I said, for some strange reason, but we welcomed the strange. We were happy. We were at the receiving end. We were the beneficiaries of it. We were treated like, in the same category as the tech companies, and we had a fantastic IPO in 1999. We were sort of oversubscribed some hundreds of times. Net, we raised about 70 crores of capital. Again, very reasonable sum of money. Our bet had worked. We had taken the gamble with a broadcast channel. We were lucky. We got the money. We made a fantastic stock market debut. And I said, all right. Now we've got, it's a charming life now. We've downscaled our entertainment business. We've upscaled our broadcast business. We took the risk. We got the money. We are listed. Let's now settle down and really scale up this business. I also made another decision at that point in time, which I think is a very important decision for any first generation entrepreneur to do. I looked at myself and I said, what are the things that I'm good at and I enjoy? So I said, I enjoy creating content. I enjoy the editorial side of the business. I also have a fairly decent understanding of balance sheets and finance, and therefore structuring transactions is something I do. These 3 things I understand, but I'm very, very poor at marketing, brand building, commercial exploitation, sales. So I said, if I continue to do this, then I don't think we'll be able to realize our full potential. Net, I realized that I needed a good, solid professional CEO so that I could focus on what I did best, which is content and finance from the balance sheet and strategic side. While an operating leader, very high pedigree should come in and really take the brand, marketing, sales, operations, commercial to another level. And, we turned to an alumnus of your wonderful institution. It's an IIM Calcutta person that I met. He was an IIT Bombay engineer and then an IIM Calcutta person. I told him that, we need you to come in and take charge of our company. I assure you that as the CEO, You will have full operational autonomy. Your powers will be more than mine when it comes to the commercial side of the business, which is, your P&L. You will be the P&L leader. I am happy being the editor of the service. So as far as the P&L is concerned, I am your subordinate. You're the boss. So please come. Please take us to another level. So, we had the good fortune of a blue-blooded IIM Calcutta, IIT Bombay, pedigreed CEO who came in at that very small scale of our business, about 20-25 crore top line, and said that, he'd love to use the power of a very powerful brand, CNBC TV 18, to scale up the business. We had the capital lying in the books, in the bank. 70 crores had been raised. And I also took then, at that point in time, another decision, and that is to have full faith in my CEO. We said, if you want to build a business channel, we can't be headquartered in Delhi. I was always headquartered in Delhi. We need to go to Bombay because that's really where the financial and the stock market and the business commercial world is. And Haresh, who was the CEO, was Bombay based in any case. So we moved the channel from Delhi to Bombay. And I said, because that also creates a distance between me and you. So you will be free. You will feel freer. Every morning you won't see my face. You will feel freer. While the intention is to make you free, you will also feel freer. The fact that you're away in another city. So we relocated. I continued to stay in Delhi because my editorship could be done from Delhi. The channel moved to Bombay, set up in a very nice state-of-the-art facility because now we had the capital. We didn't have to cut corners. We really built a world-class facility there. Our sets were designed by people from America. Our interior lighting was, imported, very soft, nice television lights. It's a beautiful studio. CNBC TV 18's sort of production quality was as good as even the US operation. So from 2000 to 2005, we behaved very responsibly, very focused on P&L. We grew from 20 crores to 100 crores plus in turnover, almost 120, 130 crores in turnover over those 5 years, 6x growth. Business was throwing up pretty decent amounts of cash, 30-40 crore rupees of cash. Very nice, very strong operations, perhaps the purple patch that I remember, and led by a strong CEO. I was doing what I was doing best, which is looking at content. And I think we had a great period of 5 years. Then came 2005. And in 2005, you know what happened? Those were the go-go years of the Indian economy. I mean, everybody and his aunt and uncle were expanding. Airtel bought the African operations, and Kumar Birla went out and bought aluminium companies in the world, and the Tatas went out and bought Chorus, and they bought Jaguar. And so everyone was in this go because money was so easily available, debt was so easily available. So we also went go because we were doing so well. So we went on a real expansion spree. So over the next 4 years, we went from a turnover of 100 crores to about 5,000 crores. I mean, that was the kind of growth we did. What did we do? We launched CNN IBN. We acquired IBN 7, now called News 18 India, and CNN News 18. It was called CNN IBN then. We launched Home Shop 18. We launched moneycontrol.com, in.com. So the whole ecosystem, Yatra, Book My Show, we made those investments and launched those companies. And then in 2007, we got this approach from Viacom, large American company, to that they were looking, and they were running MTV India with their brand. And they said they haven't been able to grow in India from 1990 to 2007. They've barely grown, while Murdoch and the others have really grown in India. So they're looking for an Indian partner who can come in and invest 50% into the company and then launch a general entertainment channel. So I said, as I said, those were go-go years. Money was easily available. There was no problem in raising debt. So we did that. We said, fine, we are your partners. We'll buy 50% into Viacom, and we launched Colors, the big general entertainment channel. That was our sort of ticket of having arrived on the big media scene, because now we had the #1 business news channel, the #1 Hindi business news channel, CNBC Awaaz, the #1 English news channel, CNN, IBN. We had great properties on the internet, and now we had Colors, the big general entertainment channel, launched, fantastically successful. Went right up to the charts very quickly. But, and that's a big but. So we had this massive run until 2008. But we had invested so much capital. We were launching so many things and they were all being very successful. But all of them were still not profitable. All of them needed capital. I mean, Colors was fantastically successful, but Colors needed capital, needed another 500, 700 crore rupees. CNN, IBN needed capital. Everything needed capital. And we were sitting, a brand was so successful. We said, oh, we'll get capital. Like a lot of others, I told you, everyone went out and bought big assets. But 2008 happened. You're students of business, you know what happened. Lehman crashed. The whole American ecosystem came crumbling down. The mortgages crumbled down. Equity markets seized up, fell, crashed. The world went into a massive recession. And here we were thinking we'd be able to raise equity to finance our big brands. Equity markets completely dried up. We had these lovely brands, but they needed a lot of capital. 2008, I remember, we were losing money at the rate of 2 crore rupees a day. Or we were investing money at the rate of 2 crore rupees a day into keeping all these brands humming. And that year, I think we invested about 700 crores plus. There was no way of getting equity. I had no other option. Success had become our own enemy because we couldn't close these brands down because they were so successful. It would have been a travesty to close them. So brands were closing down around us. NDTV had launched an entertainment channel called NDTV Imagine. Didn't work. It was in partnership with NBC. They shut it down. But here was Colors so successful, we couldn't shut it down. So our success became our own enemy. We had to keep going. And the only way to keep going was for me to leverage and raise debt, leverage and raise debt, leverage and raise debt. And I kept on doing that. Somehow, through very tough periods, we survived. And the brands continued to become stronger and stronger and stronger. Then came 2011. And there was a dramatic change in the sentiment in the stock markets, if you remember. Suddenly, 2011 were bullish markets, as we are seeing right now. For no reason at all. The markets were going all the way up. And again, we said, wow, God has given us another chance. Markets have given us another chance. Let's encash. So we went into the markets and we raised 1,000 crores of equity capital. Now I made my biggest mistake as an entrepreneur, and therefore my biggest learning as well as an entrepreneur. And after that, I'll stop because then we can have the Q&A. So, when we raised 1,000 crores, at that point in time, on my balance sheet, I had 2,000 crore rupees of debt, and we were still negative EBITDA, So now what would a sensible person, you guys, very intelligent business students, what would a sensible person have done when the balance sheet was like that? You would use the equity capital to reduce your debt, right? You had raised 1,000 crores, you had 2,000 crores, go out, reduce debt to 1,000 crores. Sell some of the non-core assets that you had developed, you didn't need them, sell them, bring your debt down to, 300, 400 crores. You were getting into positive EBITDA very, very furiously and fast. Would have been a fantastically strong balance sheet, right? Debt gone, EBITDA becoming cash positive strongly, debt levels down to very, very manageable levels. That's what a sensible guy would have done, but we were not sensible. We were still in the go-go mindset. The hubris was still there. And we made the fundamental error of believing that the markets had put the worst behind them, that, this is different. As everyone's telling you right now, it's different. It never is different in the equity markets. 2011 was a false dawn. It was a false pop. But we made the mistake of putting the 1,000 crores back into long gestation projects. We started launching a Hindi language movie channel, even before Colors had really started throwing up dollops of cash. So that got a lot of our capital in. We entered the film business, which is a bloody capital sucking business. We got into that business and invested a lot of capital there. And before we knew it, our 1,000 crore had been invested in long gestation projects. And the markets, because it was a false bounce, fell boom all again. The market just crashed all over again. And this time we were caught without our clothes on. I mean, we were literally caught in mid-sea, and the tide had gone down and we had no clothes on. I knew that survival would now be very, very difficult. We had a 2,000 crore rupee debt, and the lenders were going to call that debt in, because we had, instead of using 1,000 crores to reduce debt, we had put 1,000 crores back into long gestation projects which were not throwing up cash. To cut a long story short, there was also I had another peculiar requirement of having to hold 51% of the equity capital. That's a news licensing requirement. So if I needed to raise equity, I needed to be able to bring in 50% of the equity myself. And there was no way I could have done that. So I met Mr. Mukesh Ambani, who I knew as a very fine gentleman. And I told him that, I have this problem. I've got to raise equity. I don't have equity to put in my share. But I need to maintain 51% voting control, because that's a requirement of the news license. If I breach that requirement, we'll lose the news licenses. So Mr. Ambani said, Raghav, you've done a fantastic job. You've created this wonderful company with such lovely brands. I'll be able to give you money at zero coupon. The money will go into your holding company. It won't go, so that you can use that money to put your stake of the equity in. And I will hold zero coupon convertible bonds in the promoter holding company. So I said, perfect, wonderful. We did that, and we solved our problem. We got the money in. We cleaned up the debt. We were nice and healthy. We were generating 1 crore rupees of cash every day now. About 300 crore rupees of cash in the year, 350 crores of cash in the year. So things were very well settled. Zero debt, lots of cash being thrown up. Brands were strong. When Mr. Ambani then decided that he wanted to convert his zero coupon bonds at my holding company level, which would of course have given him majority control. And he said, why should you worry? You will still have a very strong stake in the company. Of course, I will have 3x or 4x your stake. But I will, you run the company. I don't want to run the company. I've got. To which my answer to Mukesh Bhai was that, I respect you a lot. I thought I had 10 years. I thought you had given me 10 years to turn the business around and to be able to repay the money that you had given me with fantastic returns, because you had come in as an investor. But now, for a variety of your own reasons, if you want to convert, I have given you the contractual right to convert. I will never renege on a contract. Never will I renege on a contract. So I've given you the right. You want to convert. You have the right to convert, and therefore I will not stand in your way. But I cannot be a CEO of your corporation. I have run this company as a first-generation entrepreneur, as the founder for 25 years. I cannot now become a CEO, so I must exit completely. I will go and do another thing with my life. And it's good for you as well as good for the company that you get a professional CEO to run it. Don't make me the CEO. I will not be able to. My mindset will not be that of a CEO. My mindset will be that of a founder. And that will lead to a clash, because then I won't be controlling the company, because you would have had, your equity stake would be 3x mine. Cut a long story short, the conversation continued for 6-7 months. He was very keen that I continued. I was equally convinced that it will not be good for the company. If I continue, I needed to exit. Then we parted very amicably. He realized, his last conversation with me in this context was, finally, Raghav, I realize you're an entrepreneur, and therefore you need to be in control of your company. So I realized that you can't be my CEO. Let's part as friends. So let's part as friends. And we parted as friends. I sold my entire stake. I exited the company in 2014, and I launched the Quint. That's a separate story. I won't go into that here. But the lessons of Network 18 I carried with me to the Quint. And the lesson is very simple. Don't try and grow beyond your balance sheet size. The balance sheet is a really important document. It must have intrinsic strength to withstand shocks. So you must have adequate capital to back your ambition. Never grow beyond your capital capability. And while you must empower your colleagues and your CEOs, keep a very tight control on capital and strategic calls. capital and strategic calls are calls that the founder must make, what the CEO needs to make. And you must always have a balance sheet which has the ability, which has enough absorbing capacity to take shocks. The first shock should not send you reeling on the ground and always in crisis. So like in the pandemic happened, revenues got frozen for a few months. Collections were not happening, but the balance sheet was strong and therefore it withstood the shock. So the balance sheet is very important. Don't stretch your balance sheet like a bubble gum. And you will be able to see the ups and downs of business, and keep the capital and strategic calls entirely with the founder, with yourself, because only you are able to calibrate the risks. No one else can calibrate the risks. And unless you calibrate the risks, you can't manage the risks. So you do all of that, and you allow complete operational autonomy and freedom to your CEOs. So that's the lesson, the final lesson of my first innings. I'm right now in the middle of my second innings. We're building a good company. Let's see how much we can do. We are 4.5 years old. We've got some way to go. But the Quint is doing well. It's become profitable now. Our second operation, Bloomberg Quint, is yet to be profitable, but is fast approaching profitability. And I think in the next 3 or 4 years, we should be able to have a really top of the line digital content company for our stakeholders to be proud of. That, my friend, was my story. I'm very happy to engage on any thoughts that you want to share with me.
Thank you so much, sir, for this wonderful session. Like, the story was really interesting. So this event was being live streamed on YouTube. So we have some questions over there. So
Sure.
I'd like to take one by one.
Yeah.
Right. So there was a question like, how does a media startup manage to keep ethical soundness, given the freedom that they have, along with engaging the user base? So how does one do that?
Yeah, this question has become even more pertinent today, where we are seeing that some of the old world values of the news media are being compromised. Listen, this is a real difficult situation, because now in the news world, you just don't have broadcast news by experts. You have the entire social media chatter. You have this phenomenon of fake news and misleading news and false claims and all of that, and that's all a part today of the news ecosystem. So I think we are evolving to a new point, but I remain very hopeful that the principal ingredient of news is credibility, and unless you can maintain credibility sustained for a long period of time, you will be able to create turbulence in the news world for 1 year, 2 years, 3 years, 4 years. You'll be able to create that turbulence, and therefore it'll look like you have shaken the foundation of the news world. But that doesn't happen. Someday, your own realities and sins will catch up and compromise your credibility. Once your credibility gets compromised, then people stop believing you, and then your currency goes. We are not there yet. We are certainly not there. Currently, we are still seeing the foundation being shaken of the news world. We hope that my confidence comes out right. But as of now, I can say with a fair amount of apprehension that media ethics are not what they used to be and have been compromised quite substantially.
So actually, there are a slew of questions that follow up with that very comment. It's interesting. The whole landscape of media industry has shifted from predominantly offline to online. So how did you witness this major shift of media industry, and what are some of the disruptions that the media industry has witnessed recently?
Yes. So, the biggest disruption is that media is no longer a one-way conversation. Media is now a multi-point conversation, because your audience can get back at you with questions, can get back at you with corrections, can get back at you with amplification, can get back at you with criticism. So you're engaging with your audience in real time at all times. So it's now become a conversation from a one-way broadcast. That's a big change. The second change, of course, is that you now have, you lose your audience at the click of a button. They can go away to somewhere else by just clicking a button. That's a disadvantage. The advantage is that you also are able to gain audiences at the click of a button. We are doing this YouTube live here today. It's being seen all over the world. So at no extra cost, you have a global audience at your command. So it's how these two factors will play out. One, the fact that audiences can go away very quickly. B, at no extra cost, you can get a global footprint. And we've seen that. We've seen that in the Quint. We never had a global footprint for our television channels, but the Quint has a global footprint. Nearly 1 million unique visitors come to our platforms almost every day from outside India. And we've done nothing to develop that audience. It's literally a free audience brought to us by the digital ecosystem. So there are huge opportunities in there. So the key point at which all this disruption will stabilize is when your brand power will allow you to monetize your audience. We're beginning to see that. The New York Times is from a newspaper which was struggling, has today become a super successful digital franchise with such a large number of paying subscribers. We are seeing that at Bloomberg. We are seeing that with The Economist. We are seeing that with Financial Times. So I think the evolution and sustenance of credible news brands will happen when they are able to get digital subscribers. At that point in time, the economics will change dramatically, because what's happened in the digital world is all of us talk about how revenue, advertising revenues have shrunk and have moved to platforms like Facebook and Google. I agree. Platforms like Facebook and Google, which are not content generators, but platforms, have taken a bulk of the advertising revenue. But what they've also done is shrunk your cost base. What the digital ecosystem has done is shrunk the content cost base, the distribution cost base. Today, I get videos from all over the country shot on phones and sent on Dropbox or something like that to me. Zero cost virtually, compared to the television world where you needed to uplink, get a transponder, downlink, pay hundreds of dollars to do all of that. All of that's gone. So cost has come down dramatically in the digital world. So if the cost of distribution is actually gone. So I'm able today to generate the same impact with my content at literally one-fifth the cost base. So if now I can convert my impact into digital paying subscribers, as some of the brands that I've just told you have managed to do, then the operating leverage, the profitability that comes from those lines is quite significant. And I believe that's what's going to happen. I have already seen that happening with the Quint. And I said, we're probably beginning to see that with Bloomberg Quint as well. Not yet, but we will. So my big takeaway from the digital ecosystem is, yes, our revenues, the traditional revenues have shrunk. But what the world may be missing is that the traditional costs have shrunk even more. And if my brand, my credibility and the fact that subscriptions have now become so much easier and cheaper, is more important than cheaper. I mean, the difference between 900 rupees and 1300 rupees per annum is not too much of a difference for subscribers, but ease. Can you get them with face recognition and not have to punch 10 buttons to be able to log in? So all of that has made it very easy. Payment systems on digital online have become so easy. So all of that is giving me the confidence that with the digital subscription ecosystem maturing, the operating leverage in media businesses will be strong, provided you have a brand and a credibility for which people are willing to pay. I think that's going to be the next 2-3 years will, I'm sure, prove me right.
That's really interesting. So the face recognition and all are really interesting. We have a stream of questions coming up, but in the interest of time, let's have one pertinent question, which is asked by Geetika. So relating to the real-time feedback mechanism, so the feedback is two ways, negative or positive. So how does Quint ensure or strive to curb the fake news that circulates on a real-time basis across social media platforms? So what are the steps taken by them?
So we've in fact launched a very effective, I would say. It's still becoming powerful and still on its way to becoming successful, but very effective platform called WebCoof, which is really a fact-checking platform. So we get a lot of claims. For instance, just yesterday's claim that a Khalistani flag had been put up on Red Fort. So we got that claim from social media chatter. We got the images. Our people checked all of that out. They built very powerful proprietary and non-proprietary tools to do deep searches on the internet to see what has been morphed, what has been faked. And they can come up with that in pretty quick time actually now. We become better and better at it. And then we put out a post, a WebCoof post saying, no, that's wrong. It wasn't a Khalistani flag. The tricolor was not replaced. And that post of ours got massive traffic. So that's just an example, an illustration of the fact that, yes, there is a massive amount of fake news, massive. But equally, there is now a massive amount of technology and deep tools available to check in fairly quick time the authenticity of that image, or authenticity of that video, or authenticity of that news. And therefore, you just need editorial discipline to not put something out immediately. You must have that little patience, editorial discipline to perhaps spend that 10, 15 minutes while everyone around you may be telling you, listen, the whole world has put that news out. Why don't you put that news out as well? I think that editorial discipline, that take those 15 minutes, verified, very often than not, it turns out to be fake. And then when you put that fake, when you put out with the stamp called WebCoof and this is fake, the amount of traffic that comes on that is quite. So yes, just as digital technology has permitted fakes to proliferate, they've also given you tools to check those fakes, to be able to call them out. And it's going to be a ding-dong battle in the two for a long time. So I think you're also empowered now to check. I think you need to have the editorial discipline. You have to have the editorial integrity. And again, all of that comes through, all of that adds to your brand pull. And I believe that ultimately brand pull is what gets monetized. I mean, all said and done, a lot of us think nothing about paying whatever that The Economist wants us to pay to be online subscribers, because you need that extremely sanitized content where you know the facts would have been checked 10 times before you. So you have to pay for it. You pay for it, and you're seeing that with New York Times. You're seeing that with Financial Times. You're seeing that with Wall Street Journal. You're seeing that with so many in the world now, The Guardian. So I'm confident that will happen, but it's going to be a ding-dong battle. It's not going to be a game, set, and match. And the two forces, one of them just crumbles. No, these forces are forces of evil, and the forces of good have been fighting since time immemorial. And what the battle between fake news and credible news is a manifestation of that same battle between good and evil.
Yes, sir, that's beautifully put. If we can take marketing lessons from this session, so brand pull is about being right, not just being quick. So
absolute. Yes. 100. And brand is something, you've got to invest your life in it. You've got to, because that's what audiences and consumers respond to.
That's really well put, sir. So thanks a lot, sir, for sharing.
Thank you very much.
Some of your invaluable time with us.
Thank you. It's a real pleasure speaking to you guys.
Thank
All
you,
the best.
sir. Thanks a lot. Good day, sir.
Bye. Thanks.
Hello.
Hello, sir. Good evening.
Hello, Nikhil. How are you?
I'm good, thank you. How are you?
Very good. Great. Good to be here.
So just to update you,
Yes.
we are streaming it on YouTube live as well. So most of the participants are in YouTube, wherein they will write the queries in the chat box, and
Okay.
I will be asking the queries on
Sure.
their behalf.
Okay. Wonderful.
Yes, sir. So shall we roll it, or
Yes.
shall I wait for a minute or two?
No, I'm ready. Anytime you're ready. Sorry, I think your screen is freezing. Let me rejoin.
Hello, sir. Are you there? Hello. Sir, am I audible?
There is a lag.
ओए किसका फास्ट है नेट जल्दी बता Sir, am I audible, or are you
You're
witnessing any?
audible. Yeah. No, I'm good. Thank you.
Yeah. Okay. So shall we roll it out?
Yeah, very good.
Okay. So, hello everyone. Welcome to the speaker series of Genesis, the flagship e-summit of IIM Calcutta. The theme for this year is Imagining a New Tomorrow. So far, we have seen a tremendous participation across various parts of the country, thanks to the online transition of the fest. Transition to online medium has given us a unique opportunity to invite eminent speakers across industry domains. In this session, we have with us one of the pioneers of EdTech industry. To anyone familiar with EdTech, Mr. Karan Bajaj is a common name. He is a person who doesn't need any special introduction. He is none other than the founder CEO of White Hat Junior, an ever-emerging startup backed by Nexus, Omidyar, and Owl Ventures. Mr. Karan was the CEO of Discovery Networks India before founding the White Hat Junior. His career has been split between running a consumer business and writing fiction. Some of his best-selling books have been Keep Off the Grass, Johnny Gone Down, The Seeker, which were published by HarperCollins, and Random House. A successful entrepreneur, a visionary, a yogi, a hiker, and many other things personified. The topic for today's session is opportunities that EdTech offers to budding startups. Without any wait, let me welcome Mr. Karan Bajaj to share his views on the topic. The floor is yours, sir.
Thank you, Nikhil. Great, guys. Good to be here. I graduated from IIM as well in 2000, or 2002 actually, from IIM Bangalore. So it's great to speak to fellow folks who are just starting on their journey. So I thought I would speak for about a few minutes on two topics which Nikhil had asked me for. One was about the emerging opportunities in EdTech, and second was any simple advice for entrepreneurs. So I'll give both of my perspectives on that and then open the floor for questions. So the first was, what do I see as the emerging opportunities in entrepreneurship, especially in the EdTech domain? So I'll give you a little bit of a context on White Hat Junior and give you some perspective and context of that. So White Hat Junior started in December 2018. So it's about only a 2-year-old company. And the fundamental thesis was that we would teach coding to kids live online. So there were coding platform for kids before that outside India, in the US, in Israel, and a few other places, but none of them had reached any significant scale because most of the platforms were self-learning platforms where kids actually did the coding exercises and stuff on their own. And the thesis that I started this with was that we would use coding as a tool for kids to be able to express themselves fully. So kids, by their natural instinct, are extremely creative, extremely pure, and we would give them the tools with coding to be able to take their ideas and be able to bring it to life, right? That was kind of the idea. And what was very critical to that was that there would be one teacher which would be connected to one student. So the act of having a live teacher who meets you where you are and enables you to be able to express your full potential through a very creative curriculum was very critical to the whole ecosystem, right? Because prior to that, there was no experiment at all with a live teacher. And we chose like the one-on-one model because we felt that if school, the conventional traditional school system was about one teacher with 20, 30, 40 students in a class, no matter how much the teacher put her energy into the classroom, she would never be able to individualize and customize the learning journey for a kid. As a result, the outcomes of everybody would be pretty much similar. While here with a live one-on-one experience with one teacher connected to one student, we could customize the journey for a kid and allow the kid to have their own individual outcomes, right? Which I think is the holy grail promise of EdTech, right? That every kid is unique, every kid is special, and they have their own particular learning journeys. And and if we are able to customize that learning journey for the kid, then they would be able to express their full potential in the best way possible. So the idea was that there would be a very creative coding curriculum. Then there would be one student connected to one teacher, and tech would make that happen. Students from all over the world, teachers from all over the world. And we kind of set out to execute that. And the vision of the company was very clear right from the start, that we would make kids creators, right? They would use coding to build things versus consumers of technology. Technology would be up front and center in every interaction, in every point of the day. And you could either choose to consume it or create it. And we wanted kids to be builders and creators, right? And right off the gate, the company did quite well in the beginning. Then we obviously were able to scale quite well, add teachers to the platform, add students to the platform. And at this point, there are about 12,000 teachers or 11,000 teachers growing daily on the platform. And more than 1 million kids have taken trial classes. There are kids in almost 100 countries in the world right now who take classes from the teachers, and they are building things. A 9-year-old created an anti-bullying app, a 6-year-old created a sign language app. There are thousands of kids who've created wonderful products by learning on the platform. But the reason I think this is a very interesting model for every entrepreneur is that if you truly look at what we did, it was not about coding, because we've launched maths right now 2 weeks ago with the same ecosystem, and that's doing very well as well. And the core, I would say, the success of the platform is the success of the teachers predominantly. And what we were able to do is we were able to take an extremely educated, qualified part of the Indian workforce, which is women, who are not fully represented in the workforce, and make them teachers for kids all over the world. So if you look at India, it has a very particular demographic phenomenon going on, where 50% of college graduates in India are women. 50% are men and 50% are women. Yet if you look at the workforce, only 20% of the workforce today is women. So you have this huge gap that's happening, where almost like a very significant proportion of extremely qualified, educated women are falling out of the workforce because the particular situation in India where they don't want to work out of home, have very long commutes in big cities, especially after having family responsibilities, taking care of their kids, forces them to kind of opt out of the workforce. And models like us gave them the chance to be trained, qualified, and use their, I would say, extremely like strong potential to be able to generate that into a output that was like a good or a service that's actually valued by the world, right? So I think that's a very, very powerful entrepreneurship opportunity in India, that if you look at all of the pools of extremely qualified people who are currently underutilized in the workforce, can they actually create goods and services that the whole world would value, right? If you look at the white-haired junior teacher, she's typically like an engineer who's spent, who worked for a couple of years in, say, a Cisco or an Accenture, had kids, then opted out of the workforce and was raising kids and always wanted to work but couldn't figure out how to make that happen. Now with Whitehead Junior, she's connected to students via technology from all over the world. So she can take care of her kids in the morning, then do a class with a kid in the UK in the evening, do a class late in the night with a kid in the US, do a class early in the morning with a kid from Australia, and then take care of her kids again. And maybe in the afternoon have some window where she can take care of, do classes in India as well, right? So the power of technology is that we are able to create models which enable us to take this extremely qualified workforce in India and create these custom solutions that allows them to deliver education outcomes to basically kids all over the world. So I think if I were to start another company, I would once again look and say, where are all of these highly qualified but underleveraged pools of workforce in India? And how can we use their potential and turn that into a business model that allows services and goods to be created for the world that people value? And we did that for coding, which was a new category, and it didn't exist in any other country. And the kids and the teachers became coding teachers. Now we're doing that for maths and other subjects. And I think that's a great power that an Indian entrepreneur can tap into. So that was one thought that I had that that I thought would be interesting for people to think about from an entrepreneurship perspective. The second question that the team had kind of posed to me was any advice I had for entrepreneurs or budding entrepreneurs. I think you're at a very early stage. When we were like in 2000 at least, we didn't even think of entrepreneurship as an option straight out of IIM, because we thought eventually those who had that bent that we would do it eventually. But at that point of time, we didn't think that there was no ecosystem for us to just jump and take a plunge directly. And I'm sure some of you are also debating whether to start a company now or do it later. And my general advice is that I think by its nature, you'll realize that people who have this entrepreneurial bent are very restless and like, you know, constantly wanting to try out new things. And I would say once you kind of graduate from college, even if you don't choose the entrepreneurial path early and you join in a job, you'll always have that restlessness as a part of you. And all around you, I think you'll start to see that your batchmates and classmates are settling early, right? Because obviously they're, you know, like everybody wants more defined paths, and they are like, you know, doing well in their jobs, taking up bigger and bigger responsibilities and more conventional careers, getting married, having kids, having, you know, buying their houses. And I think if you're not cut of that cloth, it's totally fine. I wish lots of people had told me that very early when I was your age, but I was always a bit of a wanderer, a restless kind of a soul. So, you know, when I joined Procter & Gamble after IIM, and then after a few years, I felt very restless and I left my job and traveled for a year, and I traveled to kind of South America, to Europe, and I was just backpacking, and I wrote my first novel. Then subsequently came back to the workforce. Then again, I took another break, wrote another novel, then took a year off to do yoga and meditation. Then eventually I started my company. But my bigger point is that if you feel that that kind of energy of being like of finding your path or being restless, I think you'll realize that your path will look very different from your classmates. And I think that's totally fine. Eventually, like I did, you know, you find your own way, right? I took many, many detours, and my path looks very atypical compared to like a typical entrepreneur's path would be when they've taken a more kind of structured approach. I think it's fine my only advice is that it's extremely fine to experiment with your life, to take your breaks, to take your detours, because eventually through all of these detours, if you learn a lot, all of this does come into fruition together, right? So if I look at my entrepreneurial journey, it's looked very short because I started Whitehead Junior in December 2018, and I'm still there, but I sold the company in August 2020. So it's been barely an 18-month-old journey, but it's actually been a culmination of many of these detours, right? So I was very confident about starting a company because I'd lived through that act of writing a novel from a blank page, right? And I did live through that act multiple times of having a blank page and turning it into a novel, having the confidence that one day, look, I can turn it into a novel that people will read. When you have that confidence, then starting the company didn't feel that intimidating, because I knew once again that the early phase would be hard, but I would be able to give it shape and create a company. If I look at all the travel I did, because I took multiple years off to just backpack, right, in Brazil, etc. when I did start this company, I was very confident that I would be able to build a product that would work internationally. And very early into the journey, within 1 year itself, Whitehead Junior launched in the US. And again, the response in the US was very good because I had this very strong instinct that even though people were telling me that Indian teachers would not be accepted in the US, I had always thought that the world is very boundaryless. And kids in particular are so pure and innocent that they don't care about race and accent. They just care a lot about the teaching and the empathy that the teacher can give. And so I was very confident once again of launching internationally. So a lot of choices I made, which led to the rapid scale up of Whitehead Junior, was a result of all my detours in my kind of very restless, experimentative phase. So if you're an entrepreneur by its nature, you'll be restless and experimentative, and others will be not. And it's totally fine to follow your path there and make those keep taking those detours, right? Whether in my case I took it to write novels or travel, but they all come together into into some kind of a holistic end state. So I would say that would be my only other advice, is to take your chances and not be worried too much about whether others are doing it or not. Yeah, with that, I thought that's all I have to say. If there are questions, I could answer it. Otherwise, it
Yes,
was
so
a
there
pleasure.
are a stream of questions.
Oh, is there? Okay.
So the participants attending the session over here, you can drop your questions in the chat box. I'll
Yeah,
ask
yeah.
your questions on your behalf, but we have a lot of questions going on in the YouTube. So this is a question asked by Mr. Vedant Modi. So coming from a mechanical background, where did you find the motivation to come up with idea to start up in coding?
It's a great question to Vedant. I would say, see, the thing is that I was a mechanical engineer in 2000. So I started the company in late 2018, right? So it's been 18 years of many, many changes. But at the core idea of it was actually less about coding in terms of how you think about coding in terms of teaching kids syntax, etc. But the broader idea of the company was that the most fundamental shift that happens when kids start to code, and there's some very good research from MIT and Tufts on that, is that they start to think of themselves as people who will build things in this world, right? So when they start to write code and they start to see that, look, magically, I put these two blocks together and something happened on the screen and something got built, right? They feel that, look, everything in this world is like an object that's created by someone and I can build it too. Now, that was very profound for me, right? Because if I looked at my own kind of journey, right, after IIM as well, till 2008, it was a very conventional kind of a journey. I was at P&G, did quite well. I was there for 5-6 years, but then I left to travel and write my novel. And the moment I started kind of writing my first novel, then my second novel, I started to build things. I started to get felt that my relationship with life was very profound, very deep, very experimentative. So when I had my own kids, I always thought that, look, they shouldn't wait so long to have this feeling that they are going to create things in this world. They should have that feeling very early. And when I read the research about early childhood coding, that really hit a chord with me. I felt that, look, kids who code early, they'll have this feeling that, look, I can build anything in this world. And that was very powerful. So for me, it was not about being a computer engineer or the coding syntax, but the idea that kids would use coding to build things. And we are actually using the same thesis in maths now. We launched a maths live one-on-one course, and we have the same thesis that if kids use maths to build things, then they'll really love maths because it's experimentative and creative and joyful. So that's how I started.
Interesting. So we have another very interesting question asked from Sweetie. Sweetie, is this your full name? Okay. So the question here is, the edtech landscape has plethora of products for students with smartphones and internet connection. What about the underprivileged ones, keeping in mind the internet penetration rate in India?
Again, it's a good question. What we are seeing now is that more and more online and offline are blending a lot. So for example, with Whitehead Junior, we saw a few months ago that there was a tremendous interest from schools to adopt coding into their platform, especially after the new education policy came out. And we created a product for schools. And we created a product for schools precisely because of what you said, that there would be a section of India who would, once we saw the response of the coding product being so strong from kids, right? And we always felt like there would be a section who did not have access to a laptop or an internet connection who would be left out of this. So the school, for example, where the Whitehead Junior coding product is being introduced, we've just partnered with 100 schools. That allows the school with a very basic infrastructure to be able to teach coding to kids. And I think that's just like one startup partnering with schools, and that allows, and most of these schools are in tier 2 or 3 towns where there is no direct access to the Whitehead Junior live model because of either internet barriers or laptop barriers. So I think more and more we'll see more and more models emerge where the online and offline ecosystem work together. We created something in online that worked in offline. Vice versa, somebody would create something in offline, like Bajaj actually. They started with an offline product that actually came into online. So I think the worlds are blending, and we'll be able to reach more and more people without the infrastructure through them.
Oh, that's really great. So that's more like collaboration. So next question is from Ankur Singh in the chat. So what is your approach to raise funds from investors? On the same lines, there is one more question asked in the chat. So when to go bootstrap and when to raise funds from the market? So do you decide between the two, when to go with what? So if you answer both.
Yes. So I think typically when you go to raise funds, the question from everybody will be whether this will work or not, right? That's obviously the question that everybody's trying to ask. There are two questions really. Is this idea powerful, and is this founder going to be able to scale? Because that's like especially in the early days, the founder and his or her ability to build the team is as important as the idea. The second question is really the founder's ability is really a culmination of your life, right? What is your track record of building things? What is your track record of scaling things? And so that's like a judgment based on your history. The first one is a more mathematical answer, which is whether how powerful your idea is. The more you're able to give that answer mathematically, the better off you'll be, right? So in my case, for example, even before I went into the market to raise funds, I had quickly set up a prototype of the product, had gotten users onto the product, which is I had tied up with my first set of teachers who taught the first set of students who actually paid. So they were paying users of the product. So that gave a lot of confidence to people that, look, this idea has some merit. And then obviously I had the credibility from my experiences to be able to command a fundraise. So my suggestion is that you should create the first version of the product on Bootstrapped. And if your model is that of paying subscribers, etc., you should get the first set of paying subscribers. You should be able to give the confidence to the investors that people are actually paying for the product, and then it becomes very much easier to raise funds.
Okay, so first bootstrap and then go for funding.
Yeah.
So next question is from Shravan Pendem. Hi, sir. Throughout your career, you took many risks in terms of career through sabbaticals and venturing into ideas like Whitehead Junior, which you didn't have any experience before. Where did you get this courage or motivation to come out of your comfort zone?
Shubham, I would say for anybody, the first leap is going to be the hardest. So I actually think the Whitehead, by the time I did Whitehead Junior, I had done it multiple times before of leaving my job to take into a leap into something unknown. I would say that the first move was the hardest, and the first move was in 2008 when I was 28 or 29 years old, and that time I was with Procter & Gamble in the US, and I decided to leave P&G, and at that point I just decided to take the leap to travel and write. And I would say that was very hard because around that time, all of my batchmates were getting married, having kids, right? Sending pictures of their houses that they were buying and all of that stuff. And I, was kind of doing the opposite. So I think once I was able to get the courage to take the first leap, subsequently, they become easier. Right. So I would say, I think you'll require a lot of courage to take the first leap, but after that, it'll become progressively easier because once you take the leap and you come back after it, you realize that you've grown a lot. And even if you hit the worst case, which by the way, I did, right? Because when I came back from my 1 year break with not any money left and stuff, I came back at the time when Lehman Brothers was collapsing in the US in 2008. So there were no jobs at all. There was a massive recession going on and I didn't have any money. And but subsequently you find a job. I got through BCG at that point of time and you recover again. So I think that gives you a lot of confidence that, look, as long as you've taken a risk and you've grown a lot out of that risk, then you'll come back and find a path. And then subsequently you'll be able to take those risks more easier. Yeah.
Yes, sir. So the next question is from Geetika. What role do you think government should play in bringing Indian education at par with competing countries by enabling edtech startups as a core part in building the nation? Such a long question. Okay.
Yeah, it's a long question, but the government, I think, is very proactive. I would say the new education policy is very visionary. Now, let's see if we are able to execute it, but the new education policy is very visionary to give kids life skills of the future and to teach subjects and to teach them in a way that it truly is very practical. So I would say the government and whatever I've seen of the education is actually quite visionary already. But beyond that, I think as entrepreneurs, see, nobody can make your path easier, right? So the government can't do much beyond the point. I think the entrepreneur has to kind of forge their own path against all odds and make things happen. So I think the government can't make it any easier. I think you like have to create a product that people want. And if you create a product that people want, then the model works and you'll succeed. Otherwise, it's just no matter what aid and assistance you get, you'll have to go back to scratch again.
Absolutely. So this is a very relevant question even for students like us. So with the digital transformation, attention spans of students falling critically low, how can education via digital medium be beneficial to the students? So we call it Zoom lag, even at IIM Calcutta. So
what do you call it at IIM Calcutta? It's called what?
We call it Zoom lag, Zoom hangover.
Okay.
So
okay.
yeah. So how do you address that?
See, I think I would say technology is almost like the best means to address that in a way, right? So I think if you look at it, if you look at just like take one example, which is the Whitehead Junior model, and I'm sure there are other models better, different than us, but why a kid is so engaged in Whitehead Junior class is because there is one teacher connected to one student, right? And that experience is completely individualized, customized. If the student is in a kind of a wacky, playful mood, then the teacher adapts to that and is proportionately playful and interesting. And if the student is in the mood to like take on a lot, then the teacher will give them a lot of additional activities because her ability to customize the curriculum is so high. So I think the wonderful part about technology is that done right, whether it's like through what we've done with one teacher connected to one student or somebody else does with AI, the wonderful part is that you're able to customize the whole learning for the kid in the way the child is ready. And I think that's the beauty of it, right? So that by its nature, that will be a very interesting class because you have almost a dedicated alternative, like you have a very dedicated person who's meeting you where you are already. So and there are multiple models like this. This is just one example where it's very powerful.
Right. So another very important question asked by Vedant Kote. So how did you manage to get teachers trained to be part of Whitehead Junior to maintain the quality education being imparted?
A very good question. I think the ability to train teachers, again, very, very tech allows you a lot of options to do that. So for example, our entire teacher recruitment process is heavily tech run. So on a given day, there'd be thousands of applicants who come. Through technology, we are able to kind of score the applicants just from the application form itself to know who would do well at Whitehead Junior based on past historical models. A short list of them are contacted via phone. After that, there are multiple demos in which the people who interview the teachers are filling all inventories in an online form, etc., where we are able to kind of again follow a candidate's journey from application and are able to select 1 out of 100 candidates who we think are based on past models would be a very good teacher at Whitehead Junior. Once they come into Whitehead Junior, then they're again given a learning management system, access to a learning management system where there are hundreds of hours of content that they have to go through and then clear certifications before they become live to teach on the platform. All of this is being kind of rigorously monitored on a real time with data flowing from past models and predictive modeling on future models based on the ability to do tech in the recruitment process. So I think recruitment and training and actually many things become very, very scalable with tech in a way that it can never be done in the offline world and allows us to kind of scale with a high level of quality. Once they even once they even like come on the platform, there is a live rating and we know what's the rating of the teachers by the students at any minute. So we know immediately if there is any teacher which falls below the control line of 4.5 out of 5 ratings, and we're able to immediately, correct for that. So I think that it's very technologically driven, the scaling of quality.
So real-time feedback is very important.
Yeah, absolutely.
Right. So the next question again related to education industry from Shravan again. How do you see the future of education, online or offline or omni-channel?
Yes, I see a future of education which is very omni-channel. I think the holy grail of edtech is, I would say, individualized learning and individualized outcome for every kid. And like I would say, if offline lays a base, for example, school and Whitehead Junior are very complementary, right? School lays a base, Whitehead Junior is able to customize it because of a personalized education, one teacher, creative curriculum, flexible curriculum. School is more kind of set curriculum, one teacher to many students. So if that sets a foundation, we are able to create like a true, I would say, personalized, delightful experience on top of that foundation to make a kid love the subject, right? So if school is about, so for example, there's a 9-year-old who's created an anti-bullying app based on what the coding she learned at Whitehead Junior. Now, even in school, if she had learned coding, like she wouldn't have her ability to be able to take that learning that she'd had in coding and be able to kind of synthesize that into what she truly wants to build, have a teacher on the other end to really interact with her on what she's building, turn it into a completely finished product that others can use. All of that would be very hard in a one-to-many kind of a ecosystem to do. So I think, but like, if they're learning foundational skills, they'll be very fast when they are on the platform. So I think I see a very blended model emerge with offline and online.
Right. Okay. So the next question is asked by Isha Sagote. How has the pandemic affected in molding edtech startups in positioning themselves in Indian education system?
I would say the pandemic has given a good boost because there was a lot of sampling of edtech during the pandemic because lots of kids were at home, and for the first time they started to sample all the edtech platforms, and at least all the platforms that had built very good robust products got a lot of sampling, and then as a result there was a lot of word of mouth for good platforms, and then they did very well. So I would say it has just accelerated the adoption of edtech. People who would have slowly discovered edtech discovered it immediately, and good platforms really thrived because of that.
Right. This is interesting. The next question is from Kanishka. Where do you draw a line of Whitehead Junior being a necessity and as a platform to pursue interests?
See, there's this classic paradigm in startups, right? That ideally a startup should be a painkiller rather than a vitamin. These are like a very famous, like a startup thought process, right? That when you have a vitamin on your shelf, right, you always forget to have it because there's no urgent need to have vitamins. But if you're really in pain, you really need a painkiller because you need to solve that pain. A startup should be more like a painkiller, right? Because if there's an urgent need for a startup, that's only where a startup would survive. So in a sense, I would like to believe that Whitehead Junior is not a vitamin which is a good to have, but a painkiller which everybody should have, because the mission is that kids should be builders and creators, right? That's their natural destiny, and the platform should enable them to basically express that natural destiny of being a creator versus a passive consumer of technology. And as we go from coding to maths and science and other subjects, I would say that mission comes to life in an even more urgent and direct way, because kids could either be anxious about maths or they could be very confident about maths because they believe that look, maths is the building block of everything in this world. I can use maths to create things. So I feel like Whitehead Junior would be an essential in the sense that it transforms a kid's relationship with learning to something which is anxiety or something which you have to rote learn into something that's very joyful and creative and confident. So in that sense, I would like to think that it would be a necessity for more and more kids.
So do we have a window for 2 more questions, sir? Some education.
Yeah. We have 7:45, so we have 5 minutes. Yeah, so sure, absolutely.
Sure. So what motivated you to practice yoga and take a break in your career? So that's pretty unconventional, right? So
Yeah. I was, so it's a good question. I was always drawn a lot from my early days to like the Eastern spiritual texts, Buddhism and yoga. And I think I was probably at a point in life when my mother was, she passed away very young. She was in her early 50s when she had cancer, and I was very present with her during that period. And I think a lot of the kind of meaning of life questions, which were at the back of my mind for many years, came to like a pretty urgent need, right? I wanted to know the some of the spiritual questions that were bothering me for many years. I wanted to get answers to quite quickly. So so I just took a year off and just lived in an ashram, did yoga, did meditation, and yeah, that was kind of the driving force. I was always interested, but I wanted to answer my, I would say, meaning of life questions more urgently. So that led to the decision to take a break and do it full time.
So one last question before we wrap up. How do you manage your writing career along with running a successful business?
I do one thing at a time. So it looks, because that I've done that I've done a lot of things, but or done maybe I look more unfocused than I am because I've done a fair amount of different things. But actually, in reality, I just do one thing at a time, get very, very consumed by it, and try to reach it to its natural conclusion. So in a way, like climb the top of the mountain before I go to another thing. So when I'm writing a novel, I'm almost doing it full time. So I've done it multiple times in my career, and each time I did it, almost each time I've done it full time, I took the time off. So for example, the last novel, the third novel that I wrote, I took almost 2 years off to write it. 1 year of traveling and 1 year of actually writing it. And in those 2 years, I was just consumed by the act that the writing should be very good, that I should be able to write at a stage where the first 2 novels I'd written were published only in India. The third one was published all over the world. So I wanted to write a novel that was good enough to be published all over the world. So I was very consumed by the act of making the writing very good. And then after I published it, after that, I joined Discovery and became the CEO. And for the 2 years that I was with Discovery, I just did Discovery. Then I did this startup. So in a sense, I just, I do diverse things, but when I do something, I really want to go very, very deep into it and accomplish something of substance in it before I move on to the next thing. So I don't try to balance too much. I just pick up one thing and make it my whole life, and then I go and pick up another thing altogether. Yeah. So that's
focus. So let's end with one pertinent question.
Yeah.
Asked by Arpit. So have you planned your next move? If you have, when can we expect that?
No, for the next couple of years, I think I have a lot to do with White Hat Junior. There's a startup has 3 phases almost, and I've seen these 3 phases in a very short period of time, which is in the 0 to 1 phase. It is very hard to get a functioning business model where you have a product that is good enough that people are talking about it. As a result, the customer acquisition cost is low. The product is going by word of mouth. Your existing users are happy and they are buying more of the product, and you've created a business model around the product, and that allows you to kind of scale from the 0 to 1 journey, right? And 90% of startups will kind of fall in that period where they're not able to get a functioning business model in place. The 1 to 100 journey is also quite tough, right? I would say the remaining 9% of startups, right, actually fail there, where they go from a business model that works to be able to scale an organization in terms of being able to hire, add people, add systems to be able to scale that whole architecture. And we went through the 1 to 100 journey in basically the 1 year. So if 2019 was the 0 to 1 journey, 2020 was the 1 to 100 journey. And now, as you've got a functioning business model and you've got an organization that has scaled well, the 100 to 1000 journey, which I'm on right now, where you actually take the product all over the world, we are launching in Mexico, etc. right now, you need to have very, very strong organizational culture and values and principles. And if anything, compliances, legal, etc. If anything, we weren't very good at that, right? In the last few months, I've learned a fair amount about that. So I think I have a lot to do and learn right now. So till the time I'm able to successfully feel that I've scaled and built a company for the long term, I would leave this journey unfinished. So I'm not really thinking about my next journey. I'm wanting to make sure that I leave this mountain somewhat conquered, somewhat climbed, so I feel like I'm halfway, maybe just starting out in a way in the entrepreneurship journey. You learn so much every day. So I feel like I'm back to a drawing board now as I try to build the company to scale from 100 to 1,000, if you will. So I'm going to finish that off and then go off and do something else altogether.
That's really nice of you, sir. So thanks a lot for sharing such invaluable insights, both from the education industry and your personal life as well. I hope that will be learning
Thank you.
lessons.
Good luck to everybody. Yeah.
Thank you, sir.
Thank you. Bye-bye.
Bye-bye.